What is up? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at the stock market, macro charts and indicators, as well as some Mag 7 stocks. So let's get into it and start off with fear and greed, and we are still in high fear territory, still similar to crypto. Fear, extreme fear, and such as with crypto, we do see sort of a downtrend from greed into fear recently with both stocks and crypto. Now, something to keep an eye on, especially with the Fed, is that are they going to keep rate cutting? All signs point to yes, but when the government reopens and data gets released, we'll see. So 25 base point rate cuts tend to be good. Even Jerome Powell said when asked why they didn't do 50, he says they wouldn't unless in an emergency situation. So usually when there's a 50 base point cut, that's when something's broken. And also the Fed has been saying that they're probably going to start quantitative easing soon. I'll show you that in the charts, and that both these things, rate cuts, quantitative easing, could be very positive for the market going forward. Now, something to keep in mind is next year, it's coming up quick. We've been taking a look at this chart for some time, and 2026, I expect to be very volatile. That'll be the second year of the presidential cycle, midterms, and one of the main reasons for that is this Shiller PE ratio. We've been comparing this bubble to that of the dot-com bubble. You can see even 1998 had a little bit of a downturn and eventually went up to 40. So we just recently hit 40. That's what happened in early 1999. And there's a lot of macro chart or macro data out there that shows that we could still have, with market conditions, about a year positive, if you can believe that. And that's what happened in 1999 as well. Even though the Shiller got above 40, we still say positive for a year. A lot of similarities between the markets of then and today. And something to keep in mind is eventually when we do get a correction, not if, but when, is that these will be good times to buy when we fall by 30%, 40%, maybe even 50%. You can see how rare that is, and that would be a great long-term horizon to have. That is something I preach on this channel. Now, as far as crypto seasonality, you can see last year, as far as with rate cuts, overall positive. October looks to be somewhat of a dud, so we'll keep an eye on that. And I talk about a lot of crypto stuff on this channel. Bitcoin macro perspective, rainbow chart, log regression, Bitcoin mining stocks. Thankfully, having a rebound today. Haven't completely closed my positions in those. Anyways, let's get into the S&P 500. So as you saw, we are in extreme or close to extreme fear territory. And one of the reasons is that we have had really great conditions for the S&P for some time. And this is the closest to the 20-day moving average that we have gotten. But we have rebounded and retaken the 20. So we're above the 50, retaken the 20. And this key area of resistance here will be right around 67, 63. So if the market reopens, the government reopens also, we are to resume being bullish, then I would not be surprised if possibly by the end of the year, we get even a 7K S&P. I've been talking about this on this channel for some time, 7K S&P, and now it looks like it's finally going to be coming true. Now, if we take off our moving averages, and let's go through a couple different indicators. Here's our stochastic and our MACD, and that's on the daily. You can see, I think I can see why people are even more afraid on the weekly time frame. We've been green for some time. We might flip a little bit negative on the weekly for the MACD and the stochastic. It does look like it wants to do that, albeit outside of these major corrections, those negative MACD flips can be short-lived by the time we get them. So keep an eye out for that by the time these things get done going to the downside. See where it is on support as far as our moving averages, especially in the daily time frame, or our fibs. I'd keep an eye on that 50. And if it were to possibly go any lower, you see the 100 does come into play time to time. So 100 at worst. I think that makes some sense with some horizontal structure, maybe 6,500 at worst. Let's take a look at the VIX. We had the VIX pop off lately, though it is finding some support. So if the VIX can't get through this support, this is on the daily time frame, maybe we're due for more VIX spikes. And these comparisons I've been making to the late 90s, 2000s .com bubble, we can go back and take a look at that with the VIX and see that was an elevated time for the VIX. You can see right here, going into 2000, we're getting a lot of VIX spikes into the mid upper 20s. So going back all the way to today, maybe that's just going to start becoming the norm. Something to keep an eye on. Percent of stocks above their 200-day average. This can be a good leading indicator sometimes, and you can see nice bounce there off all these moving average supports. So overall, if we do start to turn bullish again, do look for local tops around these high 60 areas. It can run higher in especially more bubbled situations. As I was talking about with the Fed moving from quantitative tightening to easing, they've already confirmed they're going to do that. You can see the last time they did was when we hit the 100-month moving average. And lo and behold, that was around the area that they landed on as far as quantitative tightening. And so going back to QE, turn the money printer on. That'll be good for things, such as our low caps and our cryptos, especially if gold's topping out. Gold has been crazy lately. Let's take a look at that. Everyone's been talking about gold. And because everyone's doing it is especially a reason I would be cautious about it. So gold, just busting through all our fib level targets here. I think if we change to the most recent time frame, this might be a good way to correct our fib. Yeah, you can see right there to the 3618 when we go from that high to low. Let's go to our weekly time frame. Yeah, right at the 3618, and gold had a pretty decent correction. So see what happens. It's a bit detached. Could come back down to somewhere in the mid 3Ks, but I don't think gold in the macro term is done yet, especially with China-U.S. currency wars. Yields have been mostly flat. We've shown on the monthly how this is a 200-month moving average it's run into. When the yield curve is spiking, we tend to get recessions and bottoms in the market after that. So it does seem like Trump and the administration is trying to keep yields low to keep this thing going for some time. Unemployment rate, we'll see what happens when the data comes out. I do think 4.6% or this 100-week moving average is a dangerous area to watch out for. All right, let's keep an eye on Bitcoin. So hanging on to this 200-day moving average, it did try to make a move up, and it got rejected pretty quick by the 50 and the 100. And so if this 200 can't hold, I would not be surprised to see Bitcoin come down to the 100. Now, I've seen a lot of people out there posting charts, when we have a big move like this and chop up, down, all around and come back to this level that it can fall off to the 80K area. Not saying that is going to happen, but that seems to be the big fear indicator out there. Guys, I'm still looking at the 50-week moving average personally. We've come down to the 50 bounce, come down to the 50 bounce, coming down to the 50. Are you going to bounce again? I still lean that way. I still think we have another pump or so left with Bitcoin. All right, let's get into our Mag 7 stocks as well as other risk on stocks, if you will. And taking a look at NVIDIA, hit that 1618 extension perfectly. And let's go over to the daily. Came back down to the 50. So the last time NVIDIA came to the 50, that's where people are buying it up. Hey, this is one. It's the most expensive of the mag stocks. It's at $4.5 trillion, roughly speaking, and a P ratio around 50 or something. So you're going to be buying this at a premium. It's not something I'd be buying right now. Personally, I did buy it a while ago, but I think, if this one kept running and breaking through these fib levels, 260, I think that might be an area where we would see the absolute top if we are indeed making a bubble sometime soon. So by the time it gets there, I think 260 would be an area I'd have to take profits. Microsoft also hit the 1618 fib, came down to the 50, looks to be curling back up again. So a couple similarities there between NVIDIA and Microsoft. Apple doing well recently, made a new all-time high. Let's go to the weekly. I want to show you something. That's why we take a look at the weekly. Now, the weekly, yes, it made a new all-time high, but you see what happened there is that we only had a wick and not a candle body above. So wait for a candle body. If we're not able to get one, we could come back down to the 888 at support, which is at 248, or even the 20-day moving average. So it's testing that former all-time high as resistance. Amazon been chopping down, came to the 200 bounce. We got to see it start to turn around structure. And one of the ways I do that, and you saw me pull this chart up earlier, is the MACD and the stochastic. We'll just do the MACD quick. This thing's overall still negative. I want to start to see these light red bands wherever we find support. So it might be now, and you're not always going to get the very bottom of the wick, but you could get good support here in the candle body. So yes, you wouldn't have last time got it at 193, but you would have got it at 180, but had better confirmation. So that is something I look for. Google has been doing well recently. We have to extend our fib out. So our micro fib. And overall, it does look like it's going to be taking that 1618. 2618 at 261 is next. And then we have levels in the low 300s. I think Google can still run even hotter. And as far as Meta, let's zoom in here. Meta, it loves that 20-week moving average. Sometimes comes down a little bit underneath. But I've been eyeing Meta at 860 for some time. So we'll see if it gets there. Let's go to some of our other more risk-on stocks. Coin, is yet to break above former all-time highs. But when it does, I do think Bitcoin can get up to 150K level at least. I'd be expecting coin to get somewhere around the 667 area. Palantir, always interested to see what that one's doing. And, so far, this thing's still running hot. Might come back down to the 20. And that's been as deep as it's gone before resuming to the upside. So this thing has just been going gangbusters. But coming back down to the 50, it going a little bit sideways here. So I think we're going to find out pretty soon. You see it did come down to the 100. We're going to find out pretty soon whether or not this continues to weaken. I would look at the 100 right there and maybe even a 236 pullback as it did before. If it starts doing that, could this be close to the end of Palantir? Remember, $420 billion stock, it's an AI military stock, so it's not the love about that, but it's had a P ratio of around 600. And let's finish off with, we got to go to Tesla. Sorry, I skipped over Tesla. And then we'll go to MicroStrategy. Tesla, a couple things going on. We have a fib within a fib here. Is finding some horizontal support at its former all-time high 50-day moving average. And if Tesla continues to do hot, I would be taking a look at targets here from the mid-high 600s down to here. That's a major 1618 fib there at 610. So 610 to 660, I think, would definitely, especially with this upward channel, be areas to watch for. And then let's finish off with MicroStrategy. MicroStrategy, I've been talking about this one, how the 50-week, there you go. The 50-week is breaking down. So a little nervous there. It is holding up the 236. Can it find a reversal here? Who knows? Let's take a look at some of our other indicators. MACD, something I contemplated. You can see MicroStrategy topped here in February 21 when the Bitcoin tops were in May and November. So it topped early last cycle. Did it top early this cycle? That's something I've been wondering for some time. We'll see, but it is chopping sideways. If it gets below, I'll say this area right here of around 235, I'm afraid that might be the case. So again, wait to see what's going to happen as the MACD curls up. I'm curious how this looks under a regular RSI. Yeah, it'd say that's also bearish as well. Nothing to really indicate it's going to. I mean, even more so, massive, even monthly bearish divergence. And I've even said on this channel, MicroStrategy is not one I'm buying now, especially after it ran just so freaking hot for so long. You can just go from one of these recent lows, like 4,000%. So do understand, we're closer to a crypto cycle top than we are a bottom. So you're buying at a very premium. You're not doing it for the long term. So unless you're trading and you're looking for one of these levels, do we have any sort of replication or confirmation that we are finding a base? Not yet, but keep an eye on the MACD and market conditions to flip, and maybe this 236 area could be a potential bottom. Anyways, let me know what you think in the comments below. Hope y'all are doing well, and I'll try to do a live stream tomorrow. Thanks for watching. Take care.